Hello and welcome to the Crafted Future podcast, the only podcast where we seek to break down complex financial discussions, complex financial issues into simple, relatable, actionable insights. Now, I'm your host, Christopher Nyalwal. As always, happy to be here. I hope you have done what you need to do. Subscribe to this channel so that you can get extra, notifications whenever we get new content coming up. Now, today we are going to be discussing a good topic. We're going to be discussing investments. And I know this is usually something of interest to every single person. Now, time is your friend. Many of us really never give it that much thought. But time is indeed your friend when it comes to wealth creation. And for this particular investment episode, we're going to be discussing one particular solution offered by Standard Investment Bank called Mansa X. And to help me with this discussion is none other than Lydia Nyawira, who's a relationship manager at Standard Investment Bank. And we'll just be diving into those details as we go. So just say hello. Hi, Lydia. Welcome to the episode. Yeah.
Thank you, Chris. My name is Lydia Nyawira, and thank you for having me.
Thank you for coming. I think I've been looking forward to this particular episode and this discussion with you because I want to break down a number of myths and misconceptions. And I think you're the right person to have this discussion with. So before we get down to the nitty-gritties of the Mansa solution, what do you think about, what are some of the beliefs that are there about money and how people think currently about money?
So the first one that a lot of people think about, they feel I need to get to a certain level of income so that I can start investing.
Okay.
You're waiting to start earning a six-figure for you to start making some savings and making some investments. So what I would say, that is a misconception. And you should just start where you are. Just start small from the level that you're earning, put aside of that, and start from where you are. And then, of course, there is the other thing about age. You feel you're too young.
Okay.
I'm only 20. Like, I'll retire in 30, 40 years.
It makes sense.
Yeah. So why do I need to start saving today? So also time. That is something a lot of people feel they have a lot of time. They never start planning for retirement or even for a job loss because these are things that happen. So what I've learned with time is you just start where you are and you start planning for your retirement as soon as you get your first job.
Now, for myself, especially being in the coaching space, I've met a number of people who talk about, what can I do with this little money that I have? I'll wait for a good opportunity when I can make, above 100,000 shillings. That's when now I'll start budgeting for it. I'll start planning for investments. But I like the point that you're putting that it doesn't matter how small it is. It's about starting with what you have. And many of us tend to not want that. We want to make it big first, then we invest. And then I usually feel that many Kenyans don't really like looking for investments. I don't know why, but we prefer the notion of tomorrow will take care of itself. We tend to think retirement will happen and I will be fine at the point of retirement. But you're saying it's not about even age. Age is not even a factor about it. It's about, starting at any point. Because job loss this year, I was reading an article the other day and, the number of people who've lost jobs in the NGO space are in the thousands, and it's hundreds of thousands, and it's globally. So there was a time that we never thought any funding could be cut. And all of a sudden now these things are being experienced. So what you're saying is anything can happen. It's about putting the money that you have to work for you. Maybe speak about what are some of the things that people need to know when it comes to investment? And maybe for you in particular, what got you into starting to invest? Yeah.
All right. Thanks. So first of all, maybe just like to highlight something. Warren Buffett started investing with $114. So that's approximately about 13,000.
About 13,000.
Right now, he's worth over 149 USD. He's among the richest people in the world. He didn't let the amount he had stop him from investing, and it was only 11 years. So the first thing you need to know is all about discipline and consistency and also habits. If you have 100 shillings, you can't budget for this money. Even when you get 1,000,000, you won't be able to budget for it. We have very high level executives who do not even have savings. Every day you're living from hand to mouth. So if whatever you have you feel is not enough, it may never be enough, because every time you get a salary upgrade, you want to upgrade your lifestyle.
Oh, yes.
You're now driving a Toyota. Now you feel I'm earning this
we
much.
live in a social kind of pressure.
Yeah.
Yes.
So you keep on chasing the lifestyle. You keep on keeping up with the Joneses. And eventually you find you may be earning a lot, but you're struggling a lot financially. So it's all about creating habits and also creating discipline. For me, I would say what has really influenced me has been my upbringing.
Okay.
Yeah, so I was brought up by a mother who always believed in taking care of coins. Every money has to count. You have to know, where is this shilling going? Where is this shilling going? It takes something, does this business, makes this amount of money, and no extravagant living. I think to date, I still fight with my mom because she doesn't believe in luxury. She'll just be like, why are you doing this? I mean, you should be investing money here. You should be investing money here. So I think also the culture and how we've grown up, it greatly influences how we think about money. And also how our relationships with money. Yeah. And what I would say brought me into the financial space, after SACCO, Mansa X was the first investment option that I got to know about.
Oh, really?
Yeah. And that was around 2018, 2019, when it was being launched, when it was very new. And at that time, I was working in a different organization. I was told about it 1 year. Didn't take any action. The next year, that's when I started investing, and I started seeing the results of whatever I had invested. I became passionate about it, started referring my friends. There's this opportunity. Why don't you put some money aside? And somehow I landed in that space, and so far so good. It brings me so much joy. Seeing someone being able to do a project or earning some money, they're paying school fees, they're buying a car because of the investment they've done. And also seeing people, young people, old people, saving and investing consistently.
Wow.
Yeah.
So you're one of the lucky Kenyans who grew up with a good foundation when it comes to money.
Oh, yeah. I would say I'm lucky for that. And I thank my mother for that.
Oh, yes.
Yeah.
Shout out to your mother.
Yeah.
Yeah, because I find that our background plays a big factor in terms of our money behavior. You find, when you grow up in a background where money is scarce, then you tend to have a particular mindset towards money. You have a lot of fear towards losing it. You're more inclined towards holding rather than investing. And you tend to be very cautious. And you find many people then don't look towards opportunities for growing their money that is outside their comfort zone, that kind of thing. But also on the contrary, there are people who grow up having, that luxury of money. And now they are spendthrifts. They're always spending left, right, center without any consideration of tomorrow because they know money will always be there tomorrow. Yeah. So this episode in particular, I just want to, everyone is about everyone who is out there who needs to, we're trying to shape people's mindsets, trying to get them to think differently. I love the product Mansa X, and we're going to dive deep into it just a second. But I love it for two reasons. One is it brought an alternative investment in the Kenyan space, because I feel for a long time we have been limited to just bonds and land. I think land is the most popular investment, and people have stuck towards it for a very long time. And the second thing why I love it is the aspect that there's something called compounding.
Yeah.
And I think you will just dive deep into that, just for guys to actually just see the power of this, that time is your friend. Okay, so as we dive into this now, what is Mansa X? And even before you tell us what it is, what are some of the things that it is not, that people have said that it is and it is not?
Thank you for that question. So first of all, Mansa X, it's not a Ponzi scheme. People always like, hey, this thing,
the returns are good, so
the
it
returns
must
are
not be.
unbelievable.
Mhm.
So Mansa X is a multi-asset strategy fund that is licensed and regulated by the Capital Markets Authority. It's a product of Standard Investment Bank. Standard Investment Bank opened its doors in 1995. So actually, we are now 31 years old.
Wow.
And in 2019, that's when Mansa X started. And it was more of a fund to give the local investor an opportunity to invest in the global markets. Because, for instance, you're here, a lot of these equipments you're using, they are not made by local companies. These companies are listed, could be listed in markets, in New York Stock Exchange, in London Stock Exchange. So why should you just be a consumer and not benefiting from the growth of these companies? When you think of AI, when you think of the phone you're using,
Yes.
it's made by a company. The chips are made by a company. These companies, their stocks is listed. How do you benefit? Where do you start from? So you find Mansa X started to now give the local investor an alternative. Instead of just thinking about land and the government bonds, local, Nairobi Securities Exchange. So it was more of an opportunity to give you the opportunity to have a fund that is professionally managed, and the fund manager invest in the global markets. So that is the New York Stock Exchange, the London Stock Exchange. We have other African markets in Asia and all that. So it gives you a diversification aspect. Yeah, because now we are living in a global village. So why not tap into those opportunities? Yeah.
When it comes to the global markets, we as Kenyans typically don't understand much.
Yeah.
We tend to watch the news and we're like, oh, these things are doing well, these stocks are doing well, oil is doing well, gold is doing well, or these opportunities that are out there, and it's hard to access them. But now here you're saying that Mansa X gives us the opportunity to invest in them. Maybe you could just tell us, what are some of the things that you ensure that your risk is managed, and that a typical investor who has no clue about them can be safe, knowing that their money is safe and sound. Yeah.
So the first step that we do in terms of risk management. So our fund managers, the main role is risk management. And you find that they have the knowledge to understand the markets and to be able to, let's say we have the socio-political happenings that always affect the market. If we have a war in this country, or there's a tariff change, how is this going to affect the market? So they are able now to understand, how does these socio-political events affect the market? And now from their knowledge, they are able to understand, which stock do I buy? Which commodity do I buy? Which one do I sell, and at what point? So it basically exposes you to a fund manager who is experienced and has the knowledge, and you're also protected from the downside risk, because we have diversification into different asset classes. And this ranges from single stocks to stock indices, commodities, derivatives, fixed income, exchange-traded funds. So you really don't have to understand all these. So you just give us the money, you pay us the management fee, and we do the rest for you.
So, one of the things that I tend to always ask people is trying to understand the investment you're getting into. And, with this new product, I'm just wondering, do you have some sort of avenues where people can come and be educated on the products that you guys actually invest in? Like somebody can come and learn about, the stocks, or what you said, derivatives. I don't know how many people even know what a derivative is.
So we normally have commentaries by our fund manager. So at the end of every quarter, he always does a video that is shared to the investors and prospective investors. It's on our YouTube channel at Standard Investment Bank. And this is able to help you as an investor be able to get knowledge of what happened the last quarter. And what are we looking forward to into this quarter? So this is able to give you some aspect or a perspective of what is happening. I also try to do some educational material. I have a TikTok channel that you can follow.
Yeah, which is doing really well. So congratulations on
Thank
that.
you.
Yeah.
Yeah. And now for an investor who is looking to understand, have a deep dive of what is the derivatives, what is a commodity. We have courses, professional courses that you can be able to take up. We have the CISI, that is the Chartered Institute of Securities and Investment. You can take up, it's mostly online, so you can get the materials and then you do the examination, especially if you want to become an expertise in areas of investment. And also CMA has been very impactful in terms of trying to educate the Kenyans on the investment opportunities available. So that's also a platform to look out to. They're always having trade fairs, but for some reasons, I think people always feel like getting this knowledge is only for a few, is only for the agent.
The elite.
So they don't really get to dig deep into how they can be able to be more educated on these investment opportunities.
Yeah, because I tend to believe that people usually keep off things that they don't understand.
Yeah.
Yet it may even be for their benefit to, it could be something really good, but just because they don't understand and they don't have the intention to understand it, then they tend to always pass it along. So I feel it's really important that guys put in a lot more effort in just trying to understand it before you just push it to the ground.
Yeah, and actually right now you find we have social media, we have the internet, we have ChatGPT. You can just go and check how is the stock market doing, how is what is this commodity or what is this derivatives, how is it doing in the market, where can I trade it,
like
what is hedging, who are the brokers I can use. So this information now I would say is more available than it was, of course, because of the internet. Yeah.
So I want to dive into the juicy part. What were the returns for the last year for Mansa X?
So last year was actually the best year we've had since the inception of the Mansa X Fund, where we did a net return of 20.74%.
Wow.
Which is on the Kenya Shillings Fund. And remember, this is the net after fees and taxes.
So that's my take home.
Yeah, that's 20%
your take home. What I earn.
Yes.
Wow.
Yes. And the gross was 25.74%. So our management fee is 5%. So as an investor, your take home was 20.74%. And even the juicier part is, if you allowed your money to compound, you actually took home more than 22%.
Wow.
Yeah.
These figures are, most people would be like, no, we are not used to them.
Yeah.
And it's sad, actually, because, we usually gauge a safe investment based on how much is it giving relative to the government bond.
Yeah.
And that's the ones that we are comfortable with. Or a fixed deposit in a bank somewhere when we go to a money market and it's giving us 12%, we're like, now this is a good investment. So when we hear 20%,
you're scared.
we are scared.
Yeah.
But now tell me more about if you've talked about if you had some money there and you're compounding.
Yeah.
Tell me more a bit about compounding. How does Mansa go about help people compound their money?
All right.
And if you could have an example of maybe of a number of years from starting point to end, what would be the outcome? Yeah.
So the first thing, maybe just to clarify, in terms of our returns, we cannot be compared to a money market fund. Okay. And this is basically because a money market fund looks at investing in the local markets. So this is in commercial papers, they can do treasury bills, they can do short-term bonds. So in terms of where the money is invested, it's totally different from where Mansa X invests. And you find when the government rates go down, this affects the money market funds because where the money market funds have invested has been affected.
Bonds,
for instance, last year, but the money market funds were giving a very high return because the treasury bills were even being given at 16%. Then came last year where the rates went to 7, 8, 9%. And this also now in return affects the money market funds. But when you look at where the Mansa invest, actually you can even just go online and you can even check, for instance, one of the stocks that we invested in, what was the growth for 1 year? And then you actually come to find out that, these are numbers that are realistic.
That are real.
And also the fund is actively managed, meaning we are able to shift positions depending with how the market is going. Yeah. And then now come to your question.
For compounding. Now.
Compounding. I'll take an example of an investor who took the risk and started Mansa X in 2019 when it was started. And this investor put 1 million in the fund.
First of all, what's the minimum that we need to put into Mansa?
The minimum is 250,000. That's the initial capital. And any top up, the minimum is 100,000.
Okay.
So taking of this investor who started with 1 million in 2019, right now they have over 3.4 million. Meaning the 1 million has been able to earn 2.4 million. That's at to 40% return.
2019 to now is how many
that's
years?
7 years.
About 7 years.
Yeah, from 1st January 2019 to 31st December 2025.
Wow.
So within a period of 7 years, their funds have been able to earn at to 40% return. And you find this is more because
is this with consistent investing?
No.
Yes.
There is
or
not
just
any
1
other.
million sitting
Just 1
in the
million.
account.
You don't do any withdrawal and you don't do any top up.
Okay.
So just 1 million
sitting there. So I sold some land.
Yes.
I put my 1 million there in 2019. And today I would be having 13. Did you say 13?
3.4.
3.4.
Yeah.
Oh,
yes.
3.4. Okay.
Yeah.
Sorry.
So that means the 1 million has been able to earn 2.4 million. So that's over to 40% return. And now the secret is in the compounding. If this person was withdrawing the returns at the end of every quarter, they would have about 1.2, 1.3. That is what they would have consumed. But because they allowed their money to stay in the fund for longer, you find now they've been able to make almost 1 million extra. And what is more interesting, if this person had started with the 1 million, then they continue doing a top up of 100,000 every month, they would now be in the range of 20 million.
20 million?
Yes.
Wow.
Yeah.
I don't think even land appreciates that fast.
No. It depends where the land is. But of course, the appreciation value for land is between 3 to 7%. And also getting a buyer is not as easy.
Yeah.
And now that brings us the other advantage of the Mansa X Fund, liquidity. If you need your money, with the Mansa X Special Fund, you're able to access your principal plus your returns in 2 to 3 days after you have ended the lock-in period for 6 months. Yeah.
Wow. So, many of us tend to think investing is about putting money somewhere and forgetting about it. We've met people who, put some money in stocks and forgot about them, who put some money in any particular investment, and we tend to always forget about them because we're not very intentional about our portfolio and all. So is Mansa X somewhere where it's for parking money, or it's somewhere where we actively put in money every as you say, it could be every month, could be every quarter. What's to make the most out of it? What's your advice to people?
So the Mansa X Special Fund serves different kind of clientele. And in financial advisory, we don't have a one shoe fits all. So it all depends with where are you in your life. Are you in retirement? Or are you still working? What is your age? And also, what is your financial goal? Why do you want to invest with Mansa X Special Fund? And you find when you start investing, if you want to get the most out of the investment, you need to consistently keep on topping up. You need to keep on having the discipline to keep on adding. Remember, it's not really, it's not compulsory, but it all depends with where do I want to be in another 5 years.
Goals. So goals
in another,
are really important.
In another 20 years. And what do I want Mansa X to do for me? Do I want to be using the returns I get from the Mansa X Special Fund to pay school fees? Or do I want these to be my passive income at a certain age? Or maybe when I retire. Nowadays, you don't have to wait for 60 to retire. You retire as soon as, 40, 45. You can take early retirement, or you can work
but only
without
if you're
having...
intentional with your investing.
Yeah, so, and also depending, let's say you're a retiree, you can decide Mansa X is where I'm going to park my money. And then at the end of every quarter, the returns I get from the fund are going to use to pay power bills, to pay my workers,
upkeep.
to pay, just for upkeep. Yeah? So it all depends with where you are in life. But what I've seen, whenever you start and you keep doing top-ups, the effect is going to be almost unbelievable. Yeah. You're going to wonder, how did I get here? But it's all because of the power of disciplined investment and being consistent, and also allowing your money time to grow. Yeah.
So as you said, time is your friend.
Yes,
but
time.
We don't usually, nowadays we are all up, with the likes of Bitcoin.
Yeah.
And, these alternatives that have made, becoming a millionaire almost something that happens overnight. I feel like it has somehow confused us. And we want things to happen overnight. I want to be a millionaire overnight.
Yeah.
And we tend to forget that it's, building a wealth fund is actually something that takes time. And it happens slowly, and it's a boring process because, as you said, discipline and consistency. Just doing the same thing over and over again. And we've seen it with the likes of Warren Buffett, who, of course, we not all of us have access to information at 11 years. I can't remember what you're doing at 11 years, but I definitely was not watching stocks.
Yeah, for sure.
So it's good that we get this information out there as early as possible. And I love the fact that you said this product is for all kinds of people. So if you're in retirement and you have some pension fund, you can park it there and have the interest returns to fund your upkeep for your life, so you don't depend on your children.
Oh yeah, of course. Yeah.
And then also for the young guys like us who still are we still have some productive years ahead of us. It's about putting in the work and consistency into the fund so that it will grow to get us where we want to be. I really love that part. So I think I want to take you back slightly a bit because this fund, you've said it's not compared to money market fund, all right?
Yeah.
So people usually think of money market fund as, a good alternative to park their money. So when we talk about diversification, how would you, advise someone to go about diversification? Because again, we don't want to have, someone saying, I put all my life savings in one place. Maybe talk a bit about that. Yeah.
For money market funds, they are a very good starting point for someone who is just starting life, because they give you the option to save as little as 1,000, as little as 2,000. Some you can even start with a few hundreds. So as we said, in terms of investment, you don't have to wait for you to be earning six figures for you to start. As you're starting out, you can have a money market fund where you can be building up your capital. You can be getting some interest from whatever amount of money you've invested. And there's no money that is too small. Without 1 shillings, 999 is not 1,000.
1,000.
So money markets are good for emergency fund because you also have easy access to your funds. You can put your money today and next week you can do a withdrawal. And then when you look at the Mansa X Special Fund, it's more for an investor who has gotten to a certain level where they have over 250,000 saved somewhere, and they're also willing to wait for at least 6 months. So all of these funds, they serve different purposes. So I would advise you need to have a special fund account. You need to have a money market fund account. You also need to have a CDS account. This is both for the government bonds and for shares. Then now, depending with where you are in life, you can start with, let's say, money market. Then later you get to the special fund. And now after that, you're willing now to put some money in a long-term investment, which is the infrastructure bonds. Because you look for the infrastructure bonds, they are more long-term.
Yes.
And you find it could be 2 years, it could be 20 years. So this is when you want to lock your money for longer. Then now we have shares. So this is when you're willing to take up more risks. Like last year, Nairobi Stock Exchange created a lot of millionaires. The NASI, the Nairobi All Share Index, it grew with over 50%.
Wow.
And we have some shares that grew with up to 400, 300%. So also that is something you can look up to. You can look out. However, it's always important to know for the shares, you're the one who decides which company do I buy,
Oh, yeah.
which one do I sell.
So the due diligence is on your end.
Yeah, the market research is on your end. So you're the one to decide, do I buy Safaricom? Do I buy Equity? Do I buy CNG?
Yeah.
So that is really much up to you. But for any investor, I would advise you need to have those 4 sets of accounts.
I love something you touched on, and I really want to just emphasize it, because you talk about an investor should have certain things in place as you go towards investment.
Yeah.
So one, you talked about the emergency fund.
Yeah.
And I believe this is something so key that many of us overlook. In fact, some of us, what we do is we invest our emergency fund into Mansa X, and then it's locked for 6 months. Then we are like, oh my gosh, after 3 months, I have an emergency.
Yeah.
I need it back.
Yeah.
So it's very key that we separate the two. We're like, okay, first build up your emergency fund, using money market or something like that. Build it up, and then build up your fund for investment.
Yes.
That way you're able to lock it up for a longer period and allow the compounding to happen.
Yeah.
Because if you're going to be interrupting it every 2-3 months, then you're going to be actually losing on quite a bit of interest that you'd be earning. What about other things like, in this job sector that we are in, there should be both short-term and long-term kind of goals for people. Because you find, somebody who's investing in an infrastructure bond for 20 years.
Yeah, that one is that self-actualization.
that person is very secure about what they're trying to achieve in the next 20 years.
Yeah.
So also I find that we do tend to also misalign our investments with our goals.
Yeah.
Maybe speak a bit about that, about people who misalign their goals. You pick the wrong investment for the wrong type of goal.
Yeah. So first of all, I'll say, as psychology of money teaches us, no one is crazy about their money. And what you decide to do with your money, that is your choice. And there was a reason as to why you chose that. However, you find that whenever you're looking at an investment, always have your goals and look at, why do I want a certain investment? For instance, a lot of us make mistakes, especially with land. You get your first job, and instead of even thinking, how do I achieve a certain level of cash flow? Do I have liquidity?
Yeah.
You now go start taking loans to buy land. And even the land you're buying is not bringing you any income. It's for
speculation.
It's for speculation, and it's in some godforsaken place. Before even there is power or water in that place, it's going to take another 10, 15 years.
Yeah.
Then you get into an emergency need. You're trying to liquidate the land. You can't get a buyer.
Yeah.
Or you
Especially
get a
right
buyer.
Now, it's been quite hard to get buyers.
Yeah, exactly. Or even get a buyer, but they're willing to pay you at almost the price that you bought for, and you've held that land for long.
So long.
Yeah, or even now it's a loan that is now tying down your money that maybe you could even have used to set up a business, to set up, an emergency fund. So it's always important to look at, where are you in your life? And now from there, you start working on what is my financial goal. If I'm in my 20s, 20 to 30, you're looking at a place where you should first of all be building on liquidity. You should be having an emergency fund. Then now you go to your 30 to 40 year. Now that's where you're thinking of stability, of where you can be getting regular flow of cash flow, you have a regular income. Then now you go to your 40, 50, you're now starting to plan for retirement. What happens in such a time? And then now, of course, after 50, you should now be thinking of how you should be supporting your grandchildren.
Oh, yes.
And, gifts and all that. So it's always important to look at, where am I in life? And that is going to help you be able to make a wise financial decision. And I always say the best place to start is work with a financial advisor. And they'll be able to look at, where am I in life and which solution fits me. Because what may be suitable for you may not be suitable for me because of where we are, maybe even the job we are doing, the stability of our jobs. Maybe you could be doing a contract job. So, this year you have income. Next year you don't have income. So how do you plan at that point where you're having income? So I would say there is no one financial advice that fits everyone. And it's always good to work with a financial advisor. And in terms of diversification, always look at the various investment solutions available. Do some diversification. For instance, even circles are not bad because they can help you get a loan. So you can have a circle here, you can have a money market there, you can have a special fund there. You can have land, which is productive or which you're going to build because, of course, you all aspire to own a house. But now, at what point do you build that house? Are you going to take a mortgage that you're going to pay for 20 years, 25 years, draining you of all the productive years? By the time you're retiring, you can't even resell that home.
In fact, you're living in the home. So again, you have no cash flow.
Exactly. Yeah. Whereas you can even you can invest the money and you get return that can pay your rent. So you always have to think of what smart decision do I make? However, it doesn't hurt when you have some cash flow and you have extra revenue, you go and buy a home or you build a home. So you always have to look at where am I in life and what is my goal.
I love that because I'm also big on cash flow.
Yeah.
We for a long time, success was defined for us as, get a good job.
Yeah.
If you can get a car
Yeah.
and get your own house,
yes.
you are good. If you have a family, that was what success was defined as. So we didn't care how we got to that point, getting loans and we build and we get that point where we are now in our 50s. And that's when we finished paying for this house.
Yeah.
But then now I'm forgetting I'm retiring in the next 5 years or the next 2 years. I have no investments that are going to give me food to even pay for school fees because you find nowadays, we have children a bit older. So you find at that point is when maybe you have a child going into university. How do we pay for the school fees? So I love what you're saying is sometimes, look at cash flow first. And then from this cash flow, do your developments.
Yeah.
I like that kind of thinking, and definitely hope people are following that of thinking as well.
Yeah.
All right. So as we start to wind down, I'm just thinking, okay, so with Mansa X, is this something that people should start learning more about? Because recently you celebrated 30 years, and Mansa started in 2019, which is about 7 years. 7 years right now?
Yeah, this is the 8th year.
This is the 8th year.
Yeah.
And I feel now, for some reason, now is when people are starting to ask questions about it. And so what level of confidence would you give people when they hear Mansa? Like tell them, hey, this is something that you should not fear,
So the Mansa X Special Fund, from 2019 until now, we've gone through a journey. And I would say our investors are our biggest assets. We started, of course, from zero or a few millions. And right now we are almost at the 130 billion mark with over 50,000 customers.
Wow.
And what I would like to tell the investors in terms of the confidence level, Mansa X is a fund that has been able to go through various market times. We've been here through COVID, which I would say has been the biggest, how do you call it? It's been the biggest nightmare of our time. It basically affected the whole world. Everything came to a standstill. Yeah. And even during that time, Mansa X Special Fund was still able to deliver a positive return to the investors. We've gone through 2 US elections, and the fund was still very much okay. We still delivered a positive return to the investors. We've gone through the Kenya's election, and we are still able to withstand that. And it's also the best fund like right now when you are going to the electioneering period in Kenya, because it's not prone to a lot of what is happening in the Kenyan market because of its diversification.
Yes.
Of course, they always affect in a small way, but you find because of its diversification, we're able to have other markets, to cover us. So what I would like to tell the investors is, if you've not started investing in Mansa X, I really do not know what you're waiting for. Kenyans always have that they wait and see
Wait and
attitude.
see, yes.
But I would say right now we've been tested, we've been tried, and so far we are the second largest fund. That's the collective investment schemes put together, plus the money market funds. And we are the largest special fund. And also remember, the bigger a fund is, the more it's able to withstand the market volatilities.
Yes.
And the level of experience our fund manager has, it cannot be compared with any other special fund that is coming up. Because when it's just like a doctor, a young doctor and an old doctor.
Yeah.
A doctor who's seen 1,000 patients and another doctor who's just starting out, seen 50 patients, who has more experience.
Yeah.
So Mansa X Special Fund being the largest special fund and also the oldest special fund in the market, I would like to put the investors' confidence at high level because we've been able to go through the various market dynamics and we've always tried to give a positive return to the investors. Of course, we do not guarantee returns and no fund really does that. There are always risks to any investment. Yeah, but of course, out of whatever we've been able to perform in the past, I would say now here we are. Yeah.
Flying high.
We're humble.
I love that.
Yeah.
Anything that people can expect of Mansa X in the future? Are there any plans that maybe you're able to share with us about Mansa or?
Our commitment, I would just say, is, of course, trying to have a personal relationship with our clients and working with them in their financial journey. So we can just say our commitment is to provide better services to them and also to continue helping them as they build their portfolio and build their legacy. We are not just looking at you, we are looking at you and your children and your children's children. Yeah.
All right. I love that. I think we'll end it at that. And thank you so much, Lydia, for sharing so much about about investment and also Mansa X and why it's such a good opportunity for people to jump on that train. And of course, I know we'll be getting a lot of traction from this episode. So definitely we'll be channeling, those questions your way so that, you can, answer those questions and also get people into investing.
I'll be happy to help.
Thank you so much.
Yeah.
So ladies and gentlemen, there you have it. If you're not investing in Mansa X, what are you still doing? We look forward to seeing you in the next episode where we continue to dive into this and even more in-depth topics, even on mindset, purpose, and legacy planning. So please remember to subscribe so that you get notifications, and we'll see you in our next episode.